Hey everybody, Tony here with the second lesson for the week of June 20th. If you haven't checked out the first lesson for this week, I did that on the weekly time frame and how I utilize that for identifying current market trend and future potential direction in the market. And this second lesson is going to be something that was requested by quite a few people, pattern recognition. It was hard for me to find a good example on an actual chart, let alone multiple examples. So what I did was I went in and I tried to draw some as best as I could. I apologize if they don't look perfect, but I think they will work. And like I said, I apologize that I wasn't able to give a real example. But I think these will work just fine. So in terms of pattern recognition, what exactly does that mean? Well, pattern recognition basically is identifying bullish and bearish patterns within a chart. The reason that pattern recognition is so important is because it gives you insight into what's most likely about to happen. Now, I say most likely because, as we all know by now, nothing's certain in the market, and you could, for example, see a really bullish pattern on your chart and it just doesn't play out. And vice versa, you could see a really bearish pattern or bear flag, whatever the case may be, on your chart, and for whatever reason it just doesn't play out, and that happens. And we just have to accept that going in to not only trades where we're bidding within these patterns, but any trade for that matter. Sometimes you're just at the mercy of the market and the trade will go against you. And there's absolutely nothing you can do but manage your risk and move on. So this first pattern here I have is a bull flag. Now, this is more of a symmetrical flag. These symmetrical flags can be a little bit dangerous because symmetrical patterns have the chance to break either way. If we look at this pattern above, that would be a symmetrical bear flag. Now, again, they can be a little bit riskier because symmetrical patterns, like I said, have the chance to break in either direction. But if we're looking at this bull flag, for example, when trying to use pattern recognition, we're looking essentially for areas of consolidation during an up or downtrend. So say we're in an uptrend here, okay, and we get this area consolidation. What you want to do is you want to go in and manually apply these trend lines. You need minimum 3 touches to form a pattern. So we have 1, 2, 3. That's when we can go in and manually apply our trend lines for a pattern. And after I go over these patterns, I'm going to talk about how you can go about playing these as well. So this second pattern, this is a better example of a bull flag. For bull flags, essentially, you're in an uptrend, you have consolidation, but you want to see that consolidation almost at an angle like this. You have your flag pole and then the flag itself at a little bit of an angle. Those are higher probability than something like a symmetrical flag. And then this last pattern, you may hear this referred to as a pennant or a wedge, a bull pennant, a bull wedge, bullish wedge. Essentially, the way this differs from something like this or this is that this gets extremely tight, or can get extremely tight, almost to a point. So you can see, you're just back and forth here, where this one it continues to get tighter in consolidation within this formation, and then a breakout to the upside. Now, I will go over these bearish formations, which are just the inverse of what I have here, and then I'm going to talk about how you can play these and manage your risk as well. So, talked about the symmetrical bear flag. This would be a more prominent and a higher quality bear flag, if you will, where you have your pole, your flag at an angle, and then your breakdown of that lower trend line. And this third formation is that bear pennant, bear wedge, whatever you want to refer to it as. Again, why is this different from these? Because it gets tighter in consolidation almost to a point. And these are the 3 main ones that you're going to want to familiarize yourself with. And how can you go about playing these, or how would I go about playing these? Well, when I see 3 touches within a formation, I go in and I apply my trend lines. I like to wait for a 4th touch to see if that lower or upper trend line is respected. And then once I see that 4th touch, I like to bid within the formations. So for example, we have 1, 2, 3 touches. If I get this 4th touch and I see we're working our way up in this bull flag and recognize that it's a bullish formation, I like to bid as close to the top of this formation as possible before the potential breakout. Why do I like to do this? Well, one, if this ends up breaking down, I have a good enough entry where this dotted line represents my stop loss area. I have a good enough entry within this, and the entry has low risk, where even if this does break down, I'm taking a minimal loss. Same with any of these patterns. These dotted lines are representing your stop loss areas. If I can bid within a formation, that's lower risk than say playing the breakout. And that moves on into my next point of, you can also, instead of bidding within these formations, play the breakout. I know there's people that wait for a candle close out of the formation. So say, for example, we get a breakout of this bull pennant. Some people like to wait for a candle close out of the formation and then bid. Some people simply wait for a break of that upper trend line and then they'll bid. The problem with that is there's going to be times where they may grab liquidity through a formation like this and smack it back down, or you get faked out and immediately stopped out perhaps, or you're at a loss. So I like to personally bid within these formations. Not only is it lower risk, but it does give you a better entry if they end up playing out as expected. So that's how I personally go about playing these. I hope this lesson helps, guys. It's all about repetition and screen time with recognizing these. I really suggest, if this is something that you want to learn more about, look at, starting this week, look at whatever charts you watch intraday. Try to annotate your charts, apply those trend lines, and maybe send it to me in chat, and I will be like, yeah, this looks good. This is what I have. Or I'll be honest, if I'm not seeing it, I'll be like, yeah, I just don't see it at the moment. But that's what I'm here for, to give you feedback and to be honest. And if you want to get good with these, that's what I suggest, maybe marking up your charts and double checking with me and seeing what I have. But these are the 3 main ones, guys. Intraday, I really hope this lesson helps. As always, if you have any questions, please reach out to me, and I will get back to you as soon as possible. Thanks, everybody.